Okay, so let's break down these strategies. What was the first one, the baseline?
That's the generalist. Think of it as the status quo. One single machine learning model trained on all U.S. stocks together.
Assuming predictability is basically the same across the board.
Exactly, homogeneous predictability. And importantly for this model, they normalize the data across the entire market. So a stock's return is measured against the median return of all stocks.
And the features, those 153 characteristics.
Also normalized across everything. Rank normalized specifically to put them all on a comparable scale 0 to 1.
Okay, that's the generalist. What's the opposite approach they tested?
That would be the specialist. Here, they completely flipped the script. Instead of one model, they built separate models for each industry.
Like one for tech, one for healthcare, one for energy.
Precisely. They used the 12 Fama-French industry classifications. The idea here is to let each model figure out what works specifically within its own sector.
So different drivers, different signals allowed in each industry. How did they handle the data normalization here?
It was done within each industry. So a stock's return is measured against the median return of only the stocks in its industry. And the features are also rank normalized, but again, only relative to other firms within the same industry.
That really leans into the idea of heterogeneity. But doesn't that raise potential issue? Some industries might not have that many stocks, right?
That's a really important point and a key potential weakness they acknowledge. Machine learning models, especially complex ones, often need a lot of data.
Right.
If you only have, say, a few dozen companies in a particular Fama-French industry group, the specialist model for that sector might struggle to learn effectively. Smaller sample size is definitely a concern there.
Okay, so generalist pulls everything, specialist separates everything. What's the third way?
That's the hybrid, and it tries to, well, bridge the gap. It's a single model trained on all stocks, just like the generalist.
Okay, how is it different?
The difference lies in the data preparation. It uses the data that's been processed, like the specialist model.
Ah, so returns measured against the industry median.
Exactly, and features rank normalized within their industry.
I see. So the input data reflects industry context, but the model itself sees data from all industries during training.
Precisely. It gets the potential benefit of industry-aware inputs, but still leverages the much larger data set of the entire market, hopefully overcoming that small sample size issue of the specialist.